about is R&D. So that's what I'm here to talk to you about a little bit today. This is a prime season for talking to clients and CPAs about the R&D tax credit as well as other credits that we do, such as IC DISC, for one example. Also, the Work Opportunity Tax Credit. The reason being is this time of year, what a lot of CPAs are going through with their clients is tax planning and end-of-year planning. So a lot of people are a little bit more susceptible. The holidays are coming. They tend to be in their office a little bit more, at least now until they go Christmas shopping. You know, they're trying to get things wrapped up so they can take that time off. So now is a really good time to be contacting folks about any of the products that we offer. But in particular, as people are seeing how their year has ended up, and they're ending up with a bigger tax bill than they originally planned, they're looking for credits and benefits. And so, of course, that's where the R&D credit can come into play. First of all, you know, the R&D credit is for anybody that is manufacturing any type of product. So if they manufacture a product, or they are what's called a job shop, where they take a plan and then build something from a drawing, or they're an engineering firm, or they're a software company, this is the best time of year to be in contact with them, because now is the time they're going to listen the most. Their jobs are winding up for the year, so to speak, so it's a good time to speak to them. And really the way you want to approach it is very simple. It is, you know, the R&D tax credit is about to be renewed and changed again, okay, because there are going to be some more broadening of definitions. And would you like to hear about the new changes? And then try to set up a call with me or with Terry to actually handle that call with the client, simply because they're going to, the bill is being renewed as we speak, but we all know how this Congress works. But as that bill gets renewed, they're going to have some broadening of definitions, some things that people are going to be able to take in additional, all of which creates kind of a sense of newness. And that sense of newness is one of the key things about the R&D tax credit. I wouldn't necessarily call it the R&D tax credit right out of the gate. I would call it the manufacturer's tax credit. I would call it the Section 41 wage-based tax credit, and then eventually say that it's the R&D section of the tax code, but they broadened it for companies like manufacturers, technology companies, and other companies like that. So that's one thing that's key about this time of year. It's a very good time of year to get people interested. Excuse me for yawning, I'm boring myself. And so I would encourage that. The companies that you're looking for, you want to try to find at least $1 million in payroll in the companies, which usually means the sales in the neighborhood of $2 million. The exception to that is software companies. Pretty much any size software company will qualify in one capacity or another, so I highly recommend them. Other things about R&D to know. It's very competitive out there, but there are a tremendous amount of pretenders in the marketplace, meaning one-man shops that have approached CPA firms that don't really know what they're doing. It's a game that a lot of people have jumped on, and you can leverage Core's years of experience in doing this over other people that are trying to offer to do the studies cheaper, etc. The other thing that any client should be on the lookout for is audit defense. We provide that at no additional charge as part of every one of our agreements, yet in the marketplace there are a lot of people that will be happy to do the calculations and documentation, but then either charge extra or not support it during audit, whereas we handled all of it ourselves in the event the IRS comes and starts looking at it. Okay? So for those that don't know much about the R&D credit, it is based predominantly on labor, and the IRS allows you to take 4 different types of labor towards the credit. The first type is people that are directly performing activities that qualify, such as engineers, such as project managers, such as programmers, such as production managers. And that's the first type of labor they allow us to take. The second type of labor they allow us to take are people in direct support. So, you know, people that work AutoCAD or AutoCAM, who work in supporting roles like even lab assistants, for example. All of them also, a portion of their labor qualifies. The third type is any direct supervision. So anybody that is directly supervising these activities also qualifies, and we could take their labor towards the credit. And then the fourth and final group is anything that's outsourced. We're living in an age where it's become very common for every business to outsource certain functions rather than do them inside. And the IRS allows us to take a maximum of 65% of whatever they've outsourced towards the qualifying activities. The credit itself becomes a dollar-for-dollar reduction in their overall tax liability based on a percentage of those qualifying activities. Okay? So, generally speaking, if you take a company's payroll and you multiply it by 2%, that'll give you a rough idea of what type of credit they're looking for. So a $1 million company with $1 million in payroll is probably looking at about a $20,000 credit. But that's a credit that comes directly off their tax bill. In the case of ownerships where it flows through to the owner, such as S-corps or partnerships, then it comes off of their personal tax return. So it can be very, very lucrative. Now, the main thing to tell you as a word of advice or as a word of coaching is just don't make it complicated. Sell the appointment by talking to the client first to say, I'm not the expert, but we have an expert on staff that'd be more than happy if I could set up a 15-minute appointment. We'll talk about how you qualify and maybe give you an estimate and then see where we go from there. And that's the very basics of, the R&D credit, which is one thing I wanted to talk to you about. Are there any questions? Feel free to type them in regards to the R&D credit right now before I move on to IC Disc. That's it. Don't mute me, whatever you do. Okay, well, if nobody has any questions, we could save them for the end as well. The second thing I wanted to talk to you about is what is called the IC Disc. Now, this is a concept that is new to most of you. What it stands for is Interest Charge Domestic International Sales Corporation. And what it is an opportunity for companies that export to take advantage of a break in the tax code. Now, simply put, the IC Disc is a separate entity. And I want you to view that IC Disc as what all of us are, salespeople. Every time a foreign transaction takes place, what the company will do is they will take the profit from that foreign transaction. They will pay it in the form of a commission to the IC Disc. The IC Disc then turns around and pays that commission as a dividend to the individual shareholders, which are the same owners of the company. As a result, they pay for their taxes at the capital gains rate, which caps out at 25%, rather than the maximum tax rate, which caps out at 45%. So generally speaking, there's a 15 to 20% spread between the tax rate that they would pay if they didn't use the disc versus if they do. Simple question to ask to qualify them, do you do more than $1 million in exports a year? If they say yes, they do, then bring up the topic and say, have you ever considered an IC Disc? At that point, as I like to say, get off of the freeway, because the disc is very hard to discuss, and just say, I know that it is an opportunity for companies like yours to save about 20% on your taxes on profits on foreign sales. Okay? Our service is to not only form that disc for them, but also to calculate the commissions, help them pay them out, help them get their dividends, and then help prepare the tax return at the end of the year. Because the IC Disc will have its own tax return. So that is a second opportunity. The R&D and IC Disc will tend to go together. If they qualify for the R&D credit and they do exporting, then more than likely they qualify to do the IC Disc as well. Okay? However, if you do run into companies that aren't exporting as much, which still happens, that's fine. Focus on the R&D tax credit and cost segregation, which is where you're going to make most of your money probably anyway. but it's just something I wanted to bring up as another arrow in your quiver, especially this time of year, and especially as busy as you could potentially make yourself if you're willing to get out there and talk to CPAs and clients. This is a good time of year to make relationships with CPAs. They're looking for things to take to their clients and to bring to the table at the end of the year that make them look good. So it's a good time to build those relationships so they can introduce us. One CPA relationship is worth up to 400 cold calls simply because they can just refer you 3 or 4 deals that right away that you can get and have commissions come March or April on. Okay? And that's the basics of R&D and IC Disc. The third service that we offer for companies of larger size. Now, when I say larger size, they need to be hiring at least 100 people a year. Okay? Hiring at least 100 people a year, whether it's new hires, whether it's turnover, replacement of others. So good examples of this would be restaurants like McDonald's, Burger King, Popeyes, their franchisees, hospitality type groups, or even manufacturing that turns over 100 or more employees. We can offer them a complete hiring credit solution that not only screens the employees for any of these hiring credits, but also generates the credits and does all the back-end work for the client. And that's what you hear referred to as WOTC. Stands for the Work Opportunity Tax Credit, or WOTC. The thing is, the process that we've set up in screening for WOTC credits also has a screening for what are called state hiring incentives, local hiring incentives, location-based incentives. We screen for any credit that we can, but that would be predominantly for your largest client. So in all of these cases, the best thing to simply do is to sell the appointment. Remember, none of you are probably, well, some of you may be, but the majority of you are probably not qualified to talk about these subjects with any real expertise. But if you can introduce yourself into the relationship and then bring Terry or I in, then Terry or I can help discuss this directly with the client, and then you get excellent on-the-job training about how to sell it going forward. For those who don't know me extremely well, I am much better at question and answer than I am at preparing presentations and the like. So if you guys have any questions or anything you'd like to talk about, Diane, can you somehow open it up to where they can ask questions?
Yes, Bob. This is Al Stitt. I appreciate you taking the time to make the presentation to us today. I've got a question. This is going back to the IC Disc section.
Yes.
Near the end, you had mentioned about the activities or the tasks that we perform, and you mentioned we help with forms, and then there were
the formation
that I couldn't type fast enough.
No, it's okay. The formation of the IC Disc, because it's a legal entity like forming a corporation. You have to form, it's a legal entity that you have to form. So we prepare that, as well as, I don't know if any of you have ever formed a corporation before, but there's meeting minutes required and certain statements required. We prepare all of that for the client.
Oh, okay. Okay.
You know, they tell us what bank they want to use. We prepare the banking election. I mean, you know, that's how we help them set up the IC Disc. Then, once the disc is set up, we handle the calculations on the commissions that'll be paid, which inevitably is going to equal the dividends that are going to be paid. Okay, and then we help them at the end of the year fill out the tax return. It actually has its own tax return form. It's called the 1120 IC Disc. Or their CPA. I know your clients all have CPAs. I mean, I know they're not doing their own tax work. So we help their CPA do it at the end of the year.
Okay.
Any other questions?
Other questions?
I think we're good on that. If there's something you'd like to say in conclusion, or if you guys want, I can send out his contact information at the end of this recording. I will forward you all of this recording as well from today, but we appreciate your.
No, sure. And obviously, one concluding statement is that we're here to help. You guys are not on an island. So Diane will pass out my contact information and email it to you. If you have individual questions or want to spend some one-on-one time discussing this, please don't hesitate to call me, because that's what I'm here to do, is to help. And so I can help give pointers. I can help give you more details, different things like that. It's just that every time we do these coaching calls, I try to keep them general and simple, because too much information in the wrong hands can be very damaging.
Thank you so much. We appreciate your time today, Bob.
Thank you, Bob.
Thank you, guys. Sorry that it wasn't a little more formal, and I really apologize for all the audio problems at the beginning.
Not a problem.
But perfect example of third time is the charm, because the third time I logged out of the webinar and logged back in, it worked.
Sounds good. Thank you so much. We appreciate it. Everyone have a great evening.
Thank you.
Bye-bye.
Yeah, thank you.